Redfin just issued a dire housing market update. Let's talk about it. Let's talk about what it means to you. Let's talk about what it means to pretty much buyers and sellers in the housing market. This dire warning basically calls for the fact that we are in a buyer's market. According to Redfin, in the last 6 months or so, the market has flipped. We went from a market that was dominated with sellers' power to buyers. According to Redfin, there are now at least 1.9 million sellers. But folks, there are only 1.45 million buyers. Now, of course, these are national numbers. Your buy box may differ. But I have a couple of thoughts about this dire Redfin warning. One, where have they been? You and I have been talking about a buyer's market all year. You and I have been talking about what you, the investor, you, the home buyer, should be doing. You should be watching your buy box, tracking days on market, writing disrespectful offers, following up. Now, a lot of folks like the Crash Bros and the Doomers will look at this Redfin report and declare victory. I am not sure what they are declaring victory of. Because again, just because there are more sellers than buyers does not mean home prices crash. Why? Well, unfortunately, the Doomers and Crash Bros don't understand unit mix or product mix. Because if you just step back and scratch the surface a little bit, you will realize that the sellers are predominantly above the median. Now, of course, that is not everywhere. But in many markets, as I talk to agents around the country, are starting to see luxury properties stack up, homes above the median stack up, but entry-level, classic first-time home buyer homes are still not available in great numbers. Now, what does this mean? Well, you know, the crazy fact about this is we may see large price reductions, and yet the median price may go up. This is what we have been suffering through the last couple of years in the broken housing market. We have seen the low end of the market essentially disappear, where the median and above has still transacted. This unit mix has pulled the median home price higher. And as we have more sellers and less buyers, we are going to see large discounts. You could see 50,000, 100,000. Shoot, in some markets like Orange County, maybe even King County, Seattle, maybe Miami, maybe New York, it would not be unheard of to see a $500,000 price drop. Sometimes the wealthy have to sell. So again, this Redfin dire housing market warning is nothing new to you and I. You and I have been talking about a buyer's market all year. This should not come as any surprise. But second, you and I know how to deal with this. And any Crash Bro or Doomer who uses this Redfin report to say home prices are crashing is an idiot or a moron. It is that simple. Just because the luxury is stacking up, we have more luxury sellers above the median, does not mean we are up in for an epic housing crash. That is not how it works. I am sorry. We did get some economic data this morning, and it is frankly not good. We got ISM manufacturing. Any reading below 50 is bad. It's a contraction. Last month, we had 48.7. It was expected to rise to 49.3, but in reality, it fell. It fell to 48.5. Not good. Then we got construction spending. It too was expected to rise, expected to go up 0.2. It too was negative. It was down negative 0.4%. Again, folks, what we are seeing is clear as day to you and I. It should be. We talk about it almost every day. The consumer is sitting on their wallets, and businesses are delaying, postponing, avoiding decisions. This is really going on. Let's talk about the consumer. We've gotten 3 consumer reports here recently that are interesting and we should talk about. Consumer sentiment just came out and it popped. It went up from 50.8 to 52.2. Why? Well, in reality, it's because uncertainty was getting better. However, as we learned last week, that has now changed. And we need to really think about, has uncertainty gotten worse? This week is important. As of right now, Monday morning, as we're recording this, I think uncertainty is getting worse. This could just be negotiations, but it feels like we are going down again, and that is not good. Also, I think it was very important. We talked a little bit about this with Dan Bird yesterday. The fact that consumer savings spiked, exploded, rushed higher from an expected 0.6 to almost 5% should be screaming at you. Consumers do not normally do this. I have told you for years, consumers, when they're scared, they conserve. When you see a savings rate go from 0.6 to almost 5%, all you can think about is the consumer is scared. Other thing to remember is I have always told you that consumers can be scared, contract, pull back, conserve for about 6 months. And then they just start living their life. So I think we learned last month that the consumer is clearly scared, and that will ripple through the economy. In fact, I read something from Lindsay, I'm going to say Pigza. I probably mispronounced that horribly, but I gave it an honest effort. Who is Lindsay? Lindsay's the chief economist at Stifel. Chief economist at Stifel. She is saying that she is concerned that inflation will come back and that the Fed's next rate move will be up, not down. I want to say that again. According to Lindsay, she is concerned that later this year, we will not get a token rate cut. We will actually get a rate increase. According to Lindsay, you must watch Shelter. Shelter was 4% in the latest CPI reading. We will get another reading next week, I think on Tuesday. She actually expects inflation to creep up from here because of Shelter and tariffs, and that a rate hike is not out of the question. Next up, we talked about this too with Mr. Dan Bird yesterday in our talk about the bond market. According to Jeffrey Roach, he believes that the latest PCE reading, which again was 2.1% on Friday, is going to be as good as it gets for 2025. He expects inflation to reaccelerate over the next several months. Now, folks, I have been telling you, been warning you, been hopefully getting you ready for the next 3 months. I agree and have said repeatedly that the next 3 months will show inflation reaccelerating. It is nothing more than the math behind the base effect. Later this year, inflation should be looking better, but boy, the next 3 months, no bueno, not good. Lastly, we will go through a whole bunch of Fed speak that I collected from the weekend. We got Goolsbee, Daly, Kutler, and Waller. We'll just go down the list. According to Fed President Goolsbee, two rate cuts are possible this year. I'll take that bet. It would be logical if inflation fell, sure, and the strong job market was stable. Okay. Goes on to say that we have had a stagflationary direction, not stagflation. Yeah, that sounds like you're parsing words to me, but hey, you do you. Then lastly, he talks about the court ruling last week that could extend uncertainty. This is exactly what I brought you on Thursday. It was when I first said that I think uncertainty might have gotten worse today. It was the first time we went backwards. It is interesting to see the Fed say and think the same thing. All right, Fed President Daly. Fed is in wait and see mode. Thank you very much. Businesses are taking fewer risks. Absolutely. They are not spending. They are not investing. They are delay. Bond yields show markets are trying to process uncertainty. Absolutely. And they are trying to process fiscal irresponsibility. Let's be clear. Then lastly, really making progress on inflation. I think that is going to prove to be a ill-timed comment because, again, as I've said earlier, I think inflation will be rising over the next 3 months, starting with CPI next week. Next up, we got Fed President Kugler. I don't know how to say that. We need to better understand U.S. asset safe haven status. Absolutely. I think what is going on underneath the surface is you are seeing investments in U.S.-based assets retreat. Not only less new buying, but you are seeing selling. You are seeing dollars, investments, yen repatriated to other countries. And folks, you have no idea how bad that is. If we have 100 billion, 200 billion, 500 billion less investment dollars, where does that stuff get made up? Probably in higher yields, which is not good for the economy. Lastly, Fed President Kugler says, we are monitoring lower demand for U.S. assets. Once again, folks, this is a sleeping giant. I've been telling you this for weeks. This, mistreatment of U.S.-based investments, such as Section 899, I think it is, in the big, beautiful bill, is going to incentivize people moving dollars, repatriating investments out of the U.S. right when we need them the most. This is not a good idea. And then finally, Fed President Waller, the Fed is close to reaching their inflation target. Good luck on that the next 3 months. Downside risk to the economy, the job market, and upside risk to inflation means they are definitely wait and see. He is skeptical that 10% tariffs, right, if we get to 10% tariffs everywhere, will reintroduce 3% inflation. Okay. Long yields are rising as the government fiscal concerns. I could not agree more. Not only government fiscal concerns, but again, not treating investment dollars, investment assets appropriately. You're telling people to take their dollars out. And then finally, rate cuts are possible later this year. I think Waller is just telling the market what they want to hear. At the end of the day, folks, a lot of stuff going on. Again, Redfin's dire warning should not be news to you. You and I have been talking about that all year. Also, this dire warning is great news. The crash bros and doomers will jump on it. Why is that great news? The great news for you, because more demand will fall away. More of the idiots will not participate in the market, giving you the ability to write better offers, ask for seller credits, get rate buy downs, and create deals of the decade and quite possibly deals of a lifetime. You and I should pray to the crash bros and doomers and thank them. Yes, thank them for lowering our competition. Alrighty, folks, don't forget that Steadily Landlord Insurance is a sponsor of the Daily Financial News. You can find a link in the description if you want to get a quote for landlord insurance, umbrella insurance, whatever fits your needs. They are helping me currently on a 4-plex and now a 10-plex, which is very good news to me. I like saving money. Folks, take care of yourself. Have a great day. Bye.